bring in now Stephen Guilfoyle on the floor of the New York Stock Exchange. Obviously, you have been watching the plunge that we've been seeing overnight, and it is monumental. At the same time, while it brings so much uncertainty and some fear, there's also the opportunity for traders to get in there at those lows and possibly a buying opportunity as well. Tell us what you've been seeing and thinking overnight, Stephen.
Oh, that's precisely what we've been thinking. And the uncertainty that you mentioned is monumental here because traders, we've been talking for 2 weeks about how if this happened, we would probably step in as buyers today. Now you have the stock 600 over in Europe. You're getting an 8% discount on that today. But you have the uncertainty of all those countries that might want to leave on their own. And you have Cameron, who resigned in October. Well, I'd rather he had resigned right now, and Mr. Johnson stepped in and applied for Article 50 right away. This way we get the ball rolling.
I want to just clarify and stop you right there. Article 50 is basically now they would invoke that in order to move forward with the 2-year process where now the United Kingdom will then separate from the European Union. That won't be invoked until you have new leadership. And the new leader does not necessarily need to do that right away. But it is likely they will. But again, that's another element of uncertainty. But I wanted to explain to our viewers Article 50. Go ahead.
Very good. But for that reason, I don't think the 8% discount off the 14 times earnings that you might have in Europe are as good as the 3% discount that you're going to get off the 17 times earnings that you're going to get on the S&P 500 here. So I think if you have your shopping list, as Ben Willis likes to always say, you're going to look at those stocks that you've always liked, and you're going to buy them when they hit the price that you've already set. And if they don't reach that price, then you don't buy them.
And that price might be today. Let's bring Joe back in for a second. Joe, if you can talk for a second about this monumental drop in sterling that we're seeing today, hitting the lowest level in 31 years. Were you expecting that?
No, I don't think anyone was. I think the falls we were seeing were huge. They were once-in-a-lifetime moves. They were, to put it in context, when the Black Wednesday and Britain left the exchange rate mechanism, which was a big day, sterling finished down 4%. We've seen it down 10% today. No one was expecting this, and I think the market in London really mispriced the potential of a Brexit, and they've really lost money on this.
Any issues executing orders today at all?
No, it was busy. It was very, very busy, but everything was pretty smooth. Most of the trading desks, ours included, were fully staffed overnight in London. I've been here for 24 hours now, so you know, and a lot of people have been in London. This is unprecedented times, and everyone's just trying to get a grip and a handle on what's going on with the UK economy.
Right, and it is reassuring that we have come up off the lows of the evening where we saw the CAC 40 in France down over 10%, the German DAX down over 10%. There were thoughts that they might even stop London trading today. They did not do so, so we saw that in action as well. When you were seeing the overnight action, now this could be considered, and you tell us, Stephen, you're the professional, is this a knee-jerk reaction, and what happens next week?
What you saw immediately was certainly a knee-jerk reaction. In fact, I tried to go to bed. I laid down and I put it on the radio, and I was like, you know what? If I get up right now, I can make some money. So I got up and I worked all night because these opportunities don't come around all the time. This is a once in, I don't know, 10, 15, 20-year opportunity. And when you see it, you have to grab the golden rule.
All right, let's